G'day folks, welcome back to Pete's Investing. It's 20th of March 2024. This is the Euro-US analysis. We've got a bit of a retrace happening at the moment, so with some divergence, but at the moment the Euro is trending quite long. We've also introduced a new trend table, and basically what that looks like is this, and that's where we cover all these instruments, which we cover mainly natural gas, gold and silver, the Bitcoin, but also doing some FOREX analysis. And today we're looking at the Euro-US, and you can see there the Euro-US is trending on the monthly, weekly, long or bullish movement, but on the daily it's broken to a downtrend. So is it a possible reversal? Who knows? So let's get stuck into it. So looking first off, I've got here the weekly, daily and hourly. So as I said, the monthly, weekly are both long. And here's the weekly. You can see here it's long on broken above this moving average band. So when it's above that band, it's bullish, and when it's below the band, it's bearish. And you can see there on the weekly, it's actually breaking down towards that band. So we may see a reversal sometime. In the monthly, it's still long or bullish. Weekly is bullish, and on the daily, it's actually broken through that band to a bearish outlook. So just be careful about going long. On the hourly, we've also got a bullish divergence here versus lower lows on the price. And we're projecting it to bounce and hit at the very minimum in this target range there. Also down the bottom here, I've got the ADX 25, and it's showing bullish on the weekly. It's bearish on the daily and also bearish on the hourly. Now zooming out more specifically on the price charts. So first off, going out onto the weekly, you can see there it's bounced off that support at 95.35, hit that resistance at 127.50. And it's actually been going sideways for a number of months now. On the daily, if I zoom out, a couple of things to note here. If I draw a Fibonacci from that low to that high, you'll see there it's bounced off that 61%, and that 61% is key in any Fibonacci level. If it breaks below that, we're going to see a more, in this case, it would have been a more bearish or outlook. So where are we today? If I draw another Fibonacci from that low to that high, another 61% bounce off that 61%. You can see there, had it broken higher than that, it would have been more bullish. So we're seeing a bit of a retrace back down again. And let me go to the hourly chart. So you can see there, if I zoom out, a couple of Fibonacci's here. Let me do this first one between that low and that high. It's actually broken down past the 61%. So I like to take it to the more recent lows, and you can see there it's been sort of hovering around that area, consolidating in that area for some time. And if I take it down to that previous low there, it's actually come down and bounced off the 50%. So depending on which area you go to, if it breaks much lower than that, from that little range there, then it's going to be more bearish. But at the moment, because of this this divergence, we're expecting it to bounce and hit this target area. You'll see here as well, while I've got this, I keep these rectangles drawn, and that was a bearish divergence versus higher highs on the price. It came down, hit our 38% target. And you can see if I scroll back, another bullish divergence here, hit our target. There was a bearish divergence here, hit the target, bullish, hit the target, bearish, hit the target. So these divergences happen more often than not on the hourly time frame as opposed to the daily. And as a trading idea, what I've got here is the daily chart. Again, the same as before. I've got the CCI 150 above this moving average band. So, and I've got a back test drawn here for the average down approach. And the strategy for this is at the end of the video, so stay tuned for that. So I've got the average down approach here and the stop loss approach here. So they both started trading. You can see there at that point there on I was at 18th of February, 2024. So the average down approach up to that point, you would have stopped it once when it broke into that band there on the daily, and then you would have started trading again when it broke outside of that, going long. So preferably when the daily and the weekly are long, that's when you take these trades. If you're taking on it just on a daily alone, you still can trade it, but just be careful. That I prefer to trade when the monthly, weekly and daily are all in alignment. At the moment it's gone short, so I'd avoid taking any short positions until we see the daily and the weekly both going short. At the moment, you can see there you would have stopped taking that trade on the average down and the stop loss approach when second time when it broke below that moving average band on the daily. So seeing that there, on the average down approach it generated 3,951, and on a stop loss approach it generated $250. So stay tuned to the very end of the video. This is the first slide. I've got two slides. The first slide is the average down rules. So you can pause the video and read that in your own leisure. And the second slide shows the stop loss rules. Again, pause the video at your own leisure. Thanks for watching. Hit that like and subscribe button. Hit that notification bell, and we'll see you in a future video.